Stock market volatility and interest rate concerns may have affected investor appetite for closed-end funds in the first quarter of 2018. Research Director Mike Taggart of Nuveen is here to share his thoughts on recent activity in the closed-end fund market. Overall, Mike, what stands out to you?
You know, over the past 3 months, what we've seen in the closed-end fund market is significant discount widening, pretty much across the board, across all segments. I mean, there have been a few segments, but we've seen prices just starting to drop and faster than their NAVs, which lead to discount widening. The average discount now on closed-end funds is wider than its, say, 10-year average. So, it's getting down there. Discounts are cyclical, they go up and down. And we're definitely on the down curve. We're past the average point now.
Looking at distributions, which are so important to income investors, are we seeing a general pullback or have they remained relatively consistent?
On fixed income oriented funds, we're seeing distributions slowly being reduced across the board, especially in municipal funds. Now on the equity funds and with funds that have like these managed distribution policies, we're actually seeing pretty much a steady pace and some increases just due to the strong performance in the last few years of equity funds. Now, one thing to bear in mind is when I say that we're seeing a lot of distribution reductions, most funds have maintained their a stable distribution amount, say over the past year. It's just, the number of funds that are reducing their distributions is increasing.
Now, in terms of future outlook, what areas of potential opportunity do you see?
I think there's a lot of potential opportunity right now in closed-end funds. First, you have the valuations, which, as I've said, are wider now than they have historically been on average, and so that's going to attract value kind of oriented investors. In terms of longer-term income-oriented investors, despite these distribution reductions, the distribution rates on share price, aka yield, are getting fairly attractive as well, and that's again across the board.